How many Bitcoins are there? One of the chief characteristics of Bitcoin is its limited supply. Other forms of money, included fiat currencies, can be printed at will by central banks, meaning they have unlimited supply. Welcome back to another episode of Cryptology. Subscribe to the channel now so you never miss any of our latest and greatest videos as soon as they are released. In this video, we're going to be taking a look at how many Bitcoins there are. Let's get started. Bitcoin inventor Satoshi Nakamoto capped the number of Bitcoin at 21 million, meaning there will only ever be 21 million Bitcoins in existence. On average, these Bitcoins are introduced to the Bitcoin supply at a fixed rate of 1 block every 10 minutes. In addition to the number of Bitcoins released in each of these aforementioned blocks is reduced by 50% every 4 years. By August 2021, 18.7 million Bitcoins were available, leaving roughly 2.3 million to be mined. By August 2021, 18.7 million Bitcoins were available, leaving roughly 2.3 million to be mined. The supply limitation makes Bitcoin scarce and controls inflation that might arise from an unlimited supply of cryptocurrency. As Bitcoin reaches its cap supply, its economics will alter. The incentive for various members in its ecosystem, such as miners and traders, will change. For example, miners may rely less on block rewards and more on transaction fees to earn revenue and profits for their operations. The cryptocurrencies network will also transform, and its participants will be different from the retail traders that populate its current ecosystem. However, given the cryptocurrency's relatively undeveloped ecosystem, it is difficult to predict with certainty the effect of Bitcoin reaching its cap supply. Will Bitcoin ever reach the 21 million cap? Well, before delving into the implications of Bitcoin's 21 million cap, it might be interesting to consider the question of whether it will ever reach that figure. Based on the cryptocurrency's current code base and mining process, some observers say that Bitcoin may fall shy just of the 21 million figure. To recap, Bitcoin is mined by miners who solve crypto puzzles to verify and validate a block of transactions occurring in its network. Block rewards, consisting of a set number of Bitcoins, are distributed to miners who successfully confirm a transaction block. The rewards are halved every 4 years. When the crypto was launched, the reward for confirming a block transaction was 50 Bitcoins. In 2012, it was halved to 25, and it went down to 12.5 in 2016. In May of 2020, miners stood to earn 6.25 Bitcoin for every new block. Block rewards for Bitcoin miners will continue to be halved every 4 years until the final Bitcoin is mined. Current estimates for mining of the final Bitcoin put that date somewhere in February of 2140. What happens when all 21 million Bitcoin are mined? Well, a consequence of Bitcoin not reaching its planned cap is that it leaves the possibility to remain functional for a long time after 2140. No Bitcoins will be issued, but transaction blocks will be confirmed, and fees will become the primary source of revenue. Ultimately, Bitcoin's network may function as a closed economy in which transaction fees are assessed much like taxes are. Can the rewards be in Satoshis instead of actual Bitcoin? Such a practice is unlikely and would require a change in the crypto's protocol to take effect. With that said, it is difficult to predict the effects of Bitcoin almost reaching the overall supply promised by Satoshi Nakamoto. This is partly because Bitcoin's ecosystem is still undeveloped. The crypto was originally conceptualized as a medium of exchange, but it has found more popularity as a store of value, like an investing asset instead. It is possible that the Bitcoin's ecosystem and workings might undergo a transformation, similar to the one that occurred in its identity between now and 2140. Instead, it is possible that Bitcoin's ecosystem and workings might undergo a transformation. For example, there could be a protocol change in the crypto's blockchain to allow for more than 21 million Bitcoin in existence. Remember, Bitcoin is an open source crypto and can be changed to create hard or soft forks that create new cryptos or alter their functioning. Some examples of the former are Bitcoin Cash, Litecoin, and Dogecoin, which have had minor modifications to Bitcoin's source code and created new coins that raked up billions of dollars in market valuations. Effect on Bitcoin miners. Block rewards and transaction fees are the most important source of revenue for miners, the former more so than the latter in the current setup. High prices for Bitcoin enable miners to cover an operational cost and sustain business profits because they can sell their reward stash in crypto markets. When Bitcoin is close to reaching its limit, the reward amounts may not be enough to cover operational costs at miners, let alone generate profits. If and when the supply limit is reached, Bitcoin rewards are supposed to vanish. In both instances, transaction fees are expected to pick up the slack. The amount of and mechanism for these fees depend on the state of Bitcoin's network at the point in time, so whether it's being used as a medium of exchange or as a store of value. The former may incur reasonable fees to enable Bitcoin's use in daily transaction, while the latter scenario will have miners conducting fewer and more expensive transactions. Effect on Bitcoin's network. The most valuable and useful aspect of Bitcoin is its network. Distributed ledger technology is a technological solution to the time-consuming bookkeeping and accounting that characterizes most financial transactions today. If Bitcoin becomes popular as a medium of exchange in the future, its transaction numbers will surge. Past precedent has shown that there is a significant chance that the network will slow down. This is because of Bitcoin's architecture, which relies on a distributed database to hold copies of massive ledgers, sacrificing the speed for accuracy and integrity. In such a scenario, it is likely that Layer 2 technologies like the Lightning Network will become responsible for conforming a majority of transactions on its network. Therefore, the crypto's actual network itself will only be used to settle large batches of transactions. A second possibility is that the number of transactions on Bitcoin's network falls. Such a situation is possible when Bitcoin becomes a reserve asset. Trades involving the cryptocurrency will be few. Retail traders and small trading firms who dominate its current trading ecosystem will be eliminated and replaced by large institutional players and established trading firms. They will conduct fewer and more expensive trades that will incur high transaction fees for miners. And with that, we've reached the end of this video all about how many Bitcoins there are. What have you learned from today's episode? Did you already know that there's a limited supply? Get involved. Let us know in the comments section down below. If you enjoyed this episode and found it helpful and interesting, remember to leave a thumbs up before you leave. Also, subscribe to Cryptology and click the notification bell so you're always up to date with our latest releases. As always, thanks for stopping by and watching. See you again soon in the next one.